Imagine this. A trading strategy so powerful, it was actually banned by some of the biggest financial institutions. Why? Because it worked too well. But the secret got out, and now, people who know about it are making millions. You're probably wondering how a banned strategy could be legal, let alone profitable. Stick around, because what I'm about to tell you could change your financial future forever. A couple of years ago, I was like most people, stuck in a 9-to-5 job, scraping by and dreaming of financial freedom. But my dream seemed out of reach. I didn't have the capital to play in the big leagues of Wall Street. I tried traditional stock trading, options, and even crypto, but nothing seemed to stick. Then, I stumbled onto a forum where a few people were talking about a trading strategy I'd never heard of. They called it the reverse strategy. It was simple, yet it sounded too good to be true. Apparently, it involved going against the crowd, betting on stocks everyone else was selling. But it wasn't illegal, just unconventional. I was skeptical, of course, but I couldn't help but be intrigued. What was so powerful about this strategy that it caused such a stir? At first, I thought it was a scam. I mean, who's going to bet on stocks that everyone else is abandoning? I kept reading about it, trying to understand the logic behind it. The idea was to wait until the mainstream media and analysts overhyped a stock, whether it was a company about to face a scandal or just a sector everyone was dumping. The strategy was based on identifying when a stock was undervalued despite the negativity surrounding it. It sounded insane, and, honestly, it felt risky. Everyone else was running away from these stocks. But for some reason, I decided to take a small position in one of them. I bought into a tech stock that had fallen out of favor after a major data breach. The world thought it was finished, but some of the smarter investors saw it differently. I put in $1,000, more than I could afford to lose, and waited. Weeks passed, and the stock didn't do much. I was starting to doubt myself. Maybe I had made a huge mistake. But then, the unexpected happened. The company came out with a major new product, one they had been working on in the background for months. It wasn't widely covered by the media at first, but quietly, it was gaining traction. The stock shot up by 60% in just 1 week. I couldn't believe it. I had just seen the power of the reverse strategy at work. I had bet against the crowd and come out on top. The strategy was about patience, about knowing when to hold your position long enough for the market to recognize the true value of a company that everyone else was too scared to touch. After that, I kept applying the strategy. I began following the news more closely, identifying stocks that the market was giving up on too soon. I even started using advanced tools and analysis to find these undervalued gems that no one was talking about. And that's when the magic happened. Over the next 6 months, my $1,000 investment grew to $10,000, then $30,000. I was making more money in a few months than I had in an entire year at my job. It wasn't just about luck. It was about understanding the psychology behind the market and being willing to take calculated risks when everyone else was scared. But the best part? I wasn't the only one who figured it out. People all over the world were starting to use the same strategy and seeing similar results. The secret was out, and now it's helping people get rich. So, here's the lesson. The best opportunities often come when everyone else is running in the opposite direction. Don't be afraid to go against the grain. Just make sure you're doing your homework and understanding the risks involved. If you want to learn more about how to use this strategy, hit that like button, subscribe, and let me know in the comments what stocks you think the market is overlooking right now. Who knows, you could be sitting on the next big opportunity.